Today, we are not just looking at a price chart, we are looking at a battle for the future of finance. It is the ultimate showdown, the original king, Bitcoin, against the ultimate challenger, Shiba Inu. The question is simple: which one is the better long-term play? Let us break down the data. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you wanted to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The narrative surrounding Shiba Inu has shifted dramatically since its meme coin origins. It is no longer just a dog-themed token. It is the center of a rapidly expanding ecosystem that includes Shibarium, Shiba Swap, and a growing metaverse presence. This transition is crucial because it attempts to bridge the fundamental gap between Shiba Inu and Bitcoin. Bitcoin, on the other hand, remains the undisputed king, a decentralized store of value, often referred to as digital gold. Its value proposition is clear, simple, and globally accepted. The core of this comparison is viability. Can Shiba Inu's utility-driven model overcome the foundational strength and scarcity of Bitcoin? This is the question that divides the entire crypto market. As of today, December 24, the market is presenting a stark contrast between the two assets. Bitcoin is trading at approximately $87,109, maintaining its position as a trillion-dollar asset. Shiba Inu is trading at 820 units, reflecting a period of consolidation following a volatile year. According to reports, Shiba Inu's market capitalization is hovering around $5 billion, while Bitcoin's market capitalization is approximately $1.8 trillion, as reported by financial data sources. This massive disparity in scale immediately highlights the difference in market maturity and investor confidence. The recent price action for Shiba Inu has been characterized by a notable decrease in volatility compared to previous years, a trend that some analysts interpret as a sign of market maturation, as noted in a recent market report. The market's reaction to global economic events and regulatory news is fundamentally different for these two assets. Bitcoin often acts as a macro asset, reacting to inflation data, interest rate decisions, and institutional adoption news. When a major financial institution announces a Bitcoin ETF, the price moves significantly. Shiba Inu, however, tends to react more intensely to internal ecosystem developments, such as Shibarium updates, burn rate spikes, or major exchange listings. For example, a recent analysis pointed out that while Bitcoin's dominance is a measure of stability, Shiba Inu's price is heavily influenced by speculative sentiment and community hype cycles. The price correlation between the two, while present, is far weaker than the correlation between Bitcoin and other Layer 1 protocols like Ethereum. This suggests that Shiba Inu's price action is still largely driven by its own unique, often unpredictable, internal catalysts. The most profound difference lies in the tokenomics. Bitcoin has a hard cap of 21 million coins, a fixed supply that is the cornerstone of its scarcity and store of value narrative. Shiba Inu, in contrast, has a circulating supply of approximately 590 trillion tokens. This vast supply is the primary reason its price remains in the sub-penny range. The Shiba Inu community's response to this is the aggressive burning mechanism, which has seen trillions of tokens permanently removed from circulation. However, even with burn rate spikes exceeding 100% on occasion, the impact on the total circulating supply remains statistically minor in the short term. On-chain data from September 25 showed that Shiba Inu's 90-day realized volatility had dropped to an annualized 64%, indicating a cooling off from its hyper-volatile past, but still significantly higher than Bitcoin's more stable metrics. Furthermore, on-chain activity for Shiba Inu has shown periods of flatlining in key metrics, which, as per on-chain data, is not typically a bullish signal, suggesting that while the ecosystem is building, the transactional volume is not yet consistently robust. Analysts universally agree that Bitcoin is the safer, more established long-term play due to its proven track record, institutional backing, and fixed supply. The The implication for Shiba Inu is that its long-term viability rests entirely on the success of its utility layer. If Shibarium can attract significant decentralized application development and user adoption, creating a genuine demand for the Shiba Inu token as a gas fee or utility token, the narrative shifts from a speculative meme coin to a functional ecosystem token. However, as pointed out by analysts, the current fee generation on SHIBASWAP, at approximately $430 per month, is negligible compared to the billions generated by major Layer 1 chains. This disparity implies that Shiba Inu still has a monumental task ahead to justify its valuation based on utility alone. The consensus among most financial experts is that Bitcoin is a hedge against inflation and a store of value, while Shiba Inu is a high-risk, high-reward bet on the success of a developing decentralized ecosystem. The Shiba Inu community, often referred to as the Shib Army, is one of the most passionate and engaged in the crypto space. This community-driven momentum is a powerful, intangible asset that Bitcoin lacks. Bitcoin's development is slow, methodical, and focused on security and stability, reflecting its status as a global reserve asset. Shiba Inu's development, led by the pseudonymous Kusama, is rapid, ambitious, and focused on expanding the ecosystem into gaming, metaverse, and decentralized finance. A recent partnership with an AI firm to launch a Shiba-themed mini-app is a prime example of this aggressive utility expansion. This constant stream of development news keeps the community engaged and the project relevant. However, this rapid pace also introduces risk, as evidenced by the recent security issues on the Shibarium bridge, which led to accusations of the team abandoning hack victims, as reported by sources. Bitcoin, with its battle-tested code and slow, deliberate upgrades, rarely faces such existential security and trust crises. For the short term, 1 week, 1 month, Shiba Inu's price action will likely be dictated by the outcome of the current market consolidation and any major news regarding the Shibarium ecosystem. Analysts are watching the 750-unit support level closely. A successful break above the 850-unit resistance could signal a short-term rally. Bitcoin, in the same period, is expected to continue reacting to macroeconomic data, particularly any shifts in the Federal Reserve's policy. For the long term, 3 months, 3 years, the forecast is divergent. Bitcoin's trajectory is tied to its next halving event and its continued integration into the global financial system, with many analysts predicting a push toward the $150,000 mark and beyond. Shiba Inu's long-term success, as noted by forecasters, depends on its successful transition to a utility-based ecosystem token. If Shibarium achieves mass adoption, a significant reduction in the circulating supply through burns becomes a realistic possibility, which could lead to a substantial price re-rating. If utility fails to materialize, Shiba Inu risks fading back into a purely speculative asset. The balanced opinion is that these two assets serve entirely different purposes in a diversified portfolio. Bitcoin is the foundational, low-volatility, long-term store of value. Its primary risk is systemic, a major global regulatory crackdown or a catastrophic failure of the underlying technology, both of which are considered low probability. Shiba Inu is the high-risk, high-reward venture. Its primary risks are internal: the failure of the Shibarium ecosystem to gain traction, the continued issue of its massive token supply, and the potential for developer fatigue or community fragmentation. A recent article was highly critical, stating that with no clear leader and faulty tokenomics, it is hard to see how Shiba Inu can recover its all-time high. This cautionary perspective must be weighed against the project's undeniable progress in building out its utility layer, a factor that distinguishes it from many other meme coins. So, there you have it. The king of crypto, Bitcoin, offers stability and scarcity, a hedge against the chaos. The challenger, Shiba Inu, offers explosive potential, but only if its ambitious utility plan succeeds. The data is clear. One is a fortress, the other is a rocket ship still on the launch pad. Which one you choose depends entirely on your risk tolerance. Do your own research, stay safe, and I will see you in the next one. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.